Welcome to Short View Trading. This is your morning market hit for Monday, 1st of July. It's around 9 a.m. London time. What matters today for markets? And in particular, if you're a trader of US equity futures with a 1 to 2 week time horizon, what should you be thinking about and focusing on? Which short-term models and indicators will give you the clearest steer on near-term market direction? That's the purpose of this clip. Well, US equity markets, they seem bulletproof. We've had a very strong rally since around mid-April, most of which was fueled by strength in US tech stocks. The growth-heavy sectors of the market were driving the rally. And then in the past week, as you can see on this chart, the S&P's consolidated its gains and there was a bearish key to reversal on Friday, often that signals a near-term change of trend from bullish to bearish. So the key question is, having trended sideways, having consolidated recent gains, are US equities preparing the ground to move higher? Is the uptrend about to resume, or is this market losing momentum and are equities in the US about to sell off? And indeed, looking more broadly, is there about to be a phase of rotation, perhaps away from US tech stocks into other sectors of the global equity market, perhaps, for example, into European equities? Well, certainly at the moment, there's lots of reasons to be bearish, not least charts like these. This is the CBOE put to call ratio showing that portfolios are not well protected to the downside. It's generating a sell signal for US equities, telling us about near-term complacency in markets. And in a similar vein, volatility readings are low. It's another sign of complacency, evidence that markets are now vulnerable to the downside. And if we dig within the S&P and the NASDAQ, we find that key leadership stocks are overextended to the upside. This is our overextended indicator for Nvidia. It signaled sell a couple of weeks ago. Other key leadership stocks are also overbought. So complacency is somewhat elevated. Some indicators are generating sell signals for certain stocks. There are reasons to be cautious on US equity markets, but the picture is pretty mixed. A number of our models are actually starting to generate buy signals. This indicator, for example, is the NASDAQ momentum model, which was on sell in mid-June. It's now moved back to buy. So clearly there are some conflicting messages around tech. And if we look outside tech, US equity markets don't look that frothy. If you look at the equally weighted S&P 500, for example, it's trading at around its 50-day moving average at levels first reached in late February. It's not looking overextended to the upside. Or put another way, the percentage of stocks within the S&P 500 that are technically overbought is relatively low, close to its buy threshold. So what's the conclusion? Should we sell US equities, or will the non-tech parts of the US equity market move higher? And within that, will there be rotation, not just away from US tech towards non-US tech, but also into other parts of the global equity market? Clearly, there's an argument for that. News flow overnight was encouraging for French stocks, which have been very oversold. On initial projections, Marine Le Pen's won the first round of voting with a smaller than expected majority. So it's less likely the National Rally will win an absolute majority in France. You can see the CAC on this chart. It's been bouncing this morning from just below its 200-day moving average. So how are we trading this market? What's the trade? What are we recommending? We'll have a look at our daily risk appetite gauge for detail on all of that. It's available on the website to subscribers. We also offer a free trial. If you're interested, click on the link below, enter your name and email address, and we'll send you our daily trading publication free for the next 3 weeks. So what are we watching this week in terms of data and events? Well, today we get ISM manufacturing in the US. Tomorrow is JOLTS job openings. Wednesday, we get the Fed minutes from the last meeting back in June. We also get ISM services as well as ADP employment. And then on Friday, we got non-farm payrolls. Lots going on this week. That was your morning market hit. Do follow us on YouTube, search under Short View Trading. Join us on Twitter, LinkedIn, and or Facebook. Thanks for listening.